Hello and welcome to a TraderGuide.com video. And in this video we're going to look at one of my favorite trades that's been going on for a very long time is to simply short the euro and buy the Swiss franc. I mean, quite frankly, that's been the favorite trade of most of the Forex world. As you can see, this pair has just absolutely come undone since 2007. There's been a couple quick bump up type moves, but nothing major. However, at the end of June, looking at the monthly chart, we certainly have some type of bounce in the cards. And a couple things to put in perspective as to why I think that this pair may be coming to the end of its recent move. And when I say recent, I mean last couple years. For starters, the Forex markets tend to have trends that run about 3 to 3.5 years. Can't tell you why, but if you look back historically through your charts, that does seem to be the case. A couple reasons from the fundamental side that I think that this pair could be ready for a wicked bounce is, quite frankly, from the Swiss side. The Swiss franc has been appreciating for so long that it was only a matter of time before it really started to hurt the Swiss economy. And in this previous week, we finally got some really bad PMI numbers out of Switzerland that suggest that we are finally reaching that breaking point where Switzerland, who is a massive exporter, especially to Europe, that's why this pair is so important to the Swiss, that eventually their goods just basically get priced out of the market, and it leads to economic trouble, and then of course a downturn in Switzerland, which of course should weaken the franc. So it's kind of, you have to think of it kind of like a balancing act for the central banks. And this is a balancing act, quite frankly, that the Swiss National Bank lost because they did intervene several times in this pair. There does come a point, though, where eventually just the true economic situation takes over. And I think we're starting to see a turn in that because of the Swiss problems with the strength of the franc as well as the euro appreciating, basically because they've given the Greeks a handout. It's not a bailout. It's a handout because the Greeks aren't going to pay it back. A little trivia question: guess who is the most defaulted nation, serial defaulter nation since the year 1900? That is true. It is Greece. So this is nothing new. The situation in the euro is I don't know that it's fundamentally better. It's just that the market believes that the immediate danger has passed, and as such, it'll get a little bit of a reprieve. Over the weekend, there's some finance ministers that are going to discuss some things in Europe, and I think, if I remember correctly, I believe it's about a year or so that they could be holding the Greeks, lifting the Greeks up by the time this conversation's over with. So that'll buy them a year, roughly. Well, that's very interesting because I think this all coincides real nice and neatly together. And what's going to happen is the euro will appreciate against the franc for just about enough time to meet some technical levels. And about that time is when the Greeks will become another issue, or perhaps the Irish or somebody else, and send this pair straight back down. So while I have been shorting it, now the debate comes whether or not to go long. This could be one of those career changing type trades, so I probably will get involved with it. The real question is, how long can I hang on to it? As you can see, the hammer down at the 120 level, from a technical point of view, sits right on the 120, and it has actually been triggered in the first day of the monthly trading. Now I can see that we have an immediate hurdle to get over, so that's why I'm not jumping in this right away. If we can get over this hurdle here, fine, then it's definitely a buy signal. Perhaps you can see that there's support and resistance at 130, and again at about 139. Probably 139 to 140. That's typically how these work, about 100 pip zone. So I've got some definite markers on this chart, and if I pull up a Fibonacci from the meltdown, the levels should look really familiar as I just put them up. This is the 38.2, and This is the 68.1. Um, it's really going to come down to how quickly this unwinds. With this kind of steep move, it wouldn't surprise me to see the 61.8 eventually. It's going to take several months to get there. It might even take that entire year to get there. And then, of course, once the Greeks become an issue and everybody starts worrying about default again, and they may actually do it the next time, who knows, that, of course, will drive the price back down. But a move, a retrace to 139, really is big of a deal as it sounds. Because it's basically 16 handles, really in the big scheme of things isn't much. I mean, we would still be way down over the course of the last several years, so I definitely think it's a very doable move. To put some perspective on exactly how strong last week was in the Euro Swiss, just take a look at this weekly chart. That is a double low high close. What that means is we closed at the low. We hit that low again, basically confirm that low, and then close much higher. Those of you who trade bar charts may recognize a little better there. That particular bar is no joke. So really, what you have to start to ask is, are we going to be able to break above this 124.50 level? I personally, again, I think we do, because when you look at it from a daily sense, this is a very impulsive move. This isn't a mistake. I will probably look to buy on some type of pullback on a shorter term, like a daily or a 4 hour, and then hang on for the ride, knowing full well that it is going to be a long and grinding road back up to some of these levels I talked about, such as the 130 or the 139, could be a very profitable trade. Certainly have the technicals and the fundamentals starting to line up for it, so it'd be very interesting to see how this plays out. If you guys have any questions, you can always email me at chris@thetraderguy.com or look for the links on the blog. Thanks.